Keckstead from Forex Trading Unlocked, and we are here for a New Zealand dollar, US dollar Forex market analysis for February 1st through the 5th, 2021. Before we get into that, we want to remind you through our disclaimer that this video is for illustrative and educational purposes only. Also, we'd like to remind you to subscribe to our YouTube channel, Forex Trading Unlocked. We have all kinds of video content on the Forex markets, Forex lessons, and other markets. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Reason being is we're going to actually go and look at one of those right now. So we have the Forex-Trading-Unlocked.com website pulled up, and from our nav bar, we have our workstation page, which you can find here. It's the first one on the drop-down menu. And also, if you go to Products, Courses, and Services, High Probable Japanese Candlestick Patterns, there's a link to that, and you can get a short read on the book, see if you like it. All right, New Zealand dollar, US dollar. Dark cloud cover sell signal that was triggered at the beginning of January. Since then, the market had made a higher move low, then a lower move high, a lower move low, and lower move high, and then now we're kind of in a limbo here. So what are we going to do with this? Well, right now on the hourly, we are short-term bearish. On the daily, we are bearish. As far as how far can we go with this, well, right now we're looking for a test of support here at 70.83. A failure from this level would confirm our downside momentum is ready to build. I would expect that if the market touches this area and gets below it, you're going to have all your weak longs getting squeezed, and then we'll be leaning on 70.05. This is another key pivot level right here at 70.05. Trading below here will have us leaning on our downside target area of 69.14 down to 68.22. Now, there's some unique things going on in the currency market, so let's look at the dollar index just to give you an idea. So just when the market topped for the New Zealand dollar, Australian dollar, the dollar index bottomed with a bullish engulfing line buy signal. Since then, it has made a lower move high, higher move low, higher move high, higher move low, and right now we're looking for a challenge of resistance over the next couple days and take out this 90.97 area. Should the dollar index do that, that would confirm bullish momentum in the US dollars, definitely on the short term. For hourly and daily, we're bullish. Long term and medium term, we are bearish. However, a challenge and a breach of 90.97 in the dollar index will have us challenging this 91.73 up to 92.36 area. This is most likely where you're going to run out of gas. Now let's go back to the New Zealand dollar, US dollar. So you can see that our dark cloud cover sell signal comes in line with the US dollar bullish engulfing line buy signal. So this is helping to put the market under pressure. And like I said, we are looking for a failure and a test of support here at 70.83. This is the key level to fall below. If we skip below here, that confirms lower move lows after a lower move high, which is technically what? When you have lower move highs consistently followed by lower move lows, that is an indication of what? A bearish trend. So until we change that alignment of lower move lows and lower move highs, we must stay bearish. We have a sell rally forecast on the daily and hourly basis. Long term, this market has been a bull for a year, but it's starting to show just by attrition and time that it's due for a little bit of at least a pause against the dollar and also maybe a nice size correction. This market, unlike some of the markets, like you have to look at this is in the Asiatic trade zone. New Zealand dollar, like Australian dollar, they're a big commodity country. Because of the inflation in commodity pricing right now across the board, especially in oil and some other big basic commodities used for production of goods, that's good for the New Zealand dollar. So even if the world, whether COVID-19 and lockdowns, whatever, economies are only moving slowly, as they do grow and get back online, that is good for New Zealand. So if, let's say that the dollar index, it's going to become a very hard gauge. That's why if it does rally up to the area we just showed you, that's probably where you're not going to see the index be helpful for a gauge on the New Zealand dollar anymore, because of the fact that we have divergence now. You have to look at the North American, South American trade zone as one area, the European trade zone, and the EU, the UK as one trading area, and then the Asiatic trade zone, which would be the Australian dollar, the New Zealand dollar, and the Japanese yen as another individual trade zone. We're getting back to the trade zone play in the commodity markets, meaning that we have divergence. So the dollar index, you're not going to probably see dollar bullishness or bearishness totally prevailing in all of the currencies simultaneously as we move out of the first quarter into the second quarter over the next over the next 6 to 8 weeks. And if that manifests, I think you're going to see then that the New Zealand dollar bulls may have another buying opportunity. Even if, say, like the euro and the pound may be in a free fall against the dollar index may be rallying, don't expect that to continue to pressure New Zealand dollar. Not that it won't, but it's just not likely. Now, the key level to watch here is this 72.45. Any breach of this resistance will have us leaning on the highs again and then looking to take out. Oops, let's move this over so we can get this in here. So as you can see, the high that was set right here, the very next day is where we had the dark cloud cover sell signal. This level here is the big also level. So if we get above this first level here at 72.45, that will have us leaning on this 73.18. You do not want to be short above 73.18 up here. Anything above here confirms higher move highs, big term momentum in the long term, medium term, short term trend to the upside. It may be a grind, it may be an explosion. Just use caution. Okay, so 72.45 for your weak shorts. I would definitely stay, don't get short against this above here. If you do, your risk definitely no more than 73.18. Otherwise, you're just going to get torn to shreds stupidly. Because especially if you look at this low right here, and we start the trend from here in the super short term, you can look at this as a high, then a higher move low. So if we take out this 72.45 on the short term trend, that would become bullish. Remember, the long-term, medium-term trend is bullish. So then the daily will be the only thing trying to hold it back, but that'll be probably in jeopardy and running out of gas. So with that, we're looking for a test of support first early in the week and taking out the 70.83. In fact, another level you can watch out for is the low from Thursday. Taking that out, it'll be like a little domino effect. So first 71.07, a failure here will have us leaning on 70.83. Look at that. That's another like third, what is that? 27 pip move. That's a nice little short trade just right there. And then a failure of 70.83 will really have us leaning on this key pivot at 70.05. And then stepping stone below that. You can get the page here. So this is the key area first, and then this would probably take about a good 3 to 4 weeks, maybe even 5 weeks to manifest a trade that can drop all the way down to the 69.14 to 68.22 area. We'll see how it happens. We got to get the trade started tonight first and see what happens over Monday and Tuesday. But right now we are leaning on support and we are bearish. And taking out support early in the week will probably add fuel to the fire and drive us at least into the most of the trade for the week heading towards support. And then maybe we'll get a bounce on, say, like Wednesday evening into Friday if we get a slide. So it'll get dicey, especially around the 70.05 level, where we might, let's say, take out these lows and just kind of chop around and grind and then maybe take out the lows later in the month. So don't get too overly aggressive. Just be careful that if you're, and here's another thing too, if you're an aggressive long, you know your levels. Be long against 71.07 and definitely 70.08 or 70.83 here. This is your threshold for trying to be an aggressive buyer. If you are long below here, I'm telling you, you're trying to catch a falling knife at that point. So don't try and do it. It's not a good idea. Because remember, at that point, should we break down to these areas, and if we don't take out this high, that means that we'll have made a higher move low, a lower move high, and a lower move low, which definitely confirms a short-term bearish trend leaning on support, looking for us to continue momentum over the next couple of weeks and get down to this downside target area. So with that being said, I want to say thank you very much for your time today. Good luck if you're trading New Zealand dollar, US dollar. And also remember, if you haven't already, subscribe to our Forex Trading Unlocked YouTube channel and pass it on to your friends. And check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, so you can learn how to either trade these signals the way we have a little trading plan outlined for you with all kinds of good money management rules and things like that that'll help you in all different markets. Or you can just use these signals, learn them, and apply them to your own signals just as well. So thank you very much for your time. Always go to forex-trading-unlocked.com for all of your Forex needs and information, and keep on checking us out and passing us